A year ago, we wanted to add a technology editor to our staff. A resume crossed my publisher's desk. Worked on Wall Street? Check. Managed a successful hedge fund? Check. The publisher asked my opinion. Well, it's one thing to make money in a bull market for tech stocks, I said. But a good stock picker can find opportunities in even the most hated market sectors. But Paul Mampilli, our new guy, took up the challenge with this doozy: stop panic selling gold mining stocks. And the rest is history. Paul made a bold call last February. This is just the first inning of a monster bull market for gold mining stocks, he wrote. You could make 100% to 200% over the next 12 months. But Paul was wrong. Investors who bought something like the VanEck Vectors Junior Gold Miners ETF, Nasdaq GDXJ, the following day, doubled their money in less than 6 months. Maybe he was just lucky. I mean, Paul himself will tell you that gold stocks aren't really his thing. He likes to spend his time looking for investment mega trends, not the geological versions, like Nevada's Carlin Trend, that mining companies dig out of the ground. But careful readers will note other specific calls Paul made that have worked out quite well. Hunting mega trends in stocks. A handful of months went by, and Paul wanted to focus on finding mega trend opportunities among some of the most widely followed technology stocks on Wall Street. Again, it was possible to have doubts. I mean, what could he possibly see that 99% of Wall Street strategists and research analysts could not? Plenty, it turns out. He's recommended 11 stocks, all of them are still in the portfolio. His best recommendation is up nearly 45% in 3 months. His worst? Down 3%. That's when we truly recognized Paul's forte. Paul has that rare and highly valuable skill of identifying extremes. It gave us an idea. Extreme fortunes. Why not turn Paul loose and allow him to use his skills to the utmost? Paul's goal is simple. Target and capture small company stocks with the potential for multiple 1000% gains. That means no penny stocks, no options or extreme forms of leverage. Paul will continue to do what he's always done: read lots and lots of books, sift them for their most profitable, big ideas, and then examine volumes of corporate documents and real-time market data to find the best investment candidates. After that, as yet another filter, he plugs in his many years of experience as an analyst and hedge fund manager. Only then does he identify the true diamonds in the rough among the hundreds of small companies that trade on the major exchanges. The vast majority of them undercovered and overlooked by Wall Street. Paul proved the value of his stock-picking skills to investors in his $7 billion hedge fund. He demonstrated those abilities to readers over the past year.